Ladies and gentlemen, if you own gold or silver, I want you to pay very close attention because what I'm about to tell you could make a monumental difference for your financial future. Right now, the world is printing money at unprecedented rates. Debt is exploding and the dollar is under attack. If you think your savings are safe sitting in a bank account, think again. The time to protect your wealth isn't next year, it's right now, and that's why this is critical if you own gold or silver. If you own gold or silver, you already know that these metals aren't just commodities. They are the ultimate hedge against the financial chaos that is engulfing the world. But I want to make one thing very clear. Most people still don't understand just how critical it is to hold physical precious metals right now. They look at the stock market, they check their 401s, they see their bank balances, and they assume everything is fine. But the reality is very different. The dollar is under siege, inflation is raging, and the central banks have created a system where paper money is nothing more than a promise that can't be kept. In times like these, gold and silver are not optional, they are essential. The first thing you have to understand is that gold and silver are the ultimate form of money. Unlike paper currencies that can be printed endlessly or digital numbers on a screen that can be manipulated with a keystroke, these metals are tangible. They cannot be created out of thin air. They have intrinsic value. This is why throughout history, when governments devalue their currencies, gold and silver always rise. They don't rely on trust in a system that is fundamentally broken. When your paper money is losing purchasing power every single day, holding assets that can't be devalued becomes not just a strategy, but a necessity. Right now, we are living in a period of extreme monetary experimentation. The Federal Reserve and other central banks are desperate. They have pushed interest rates to historic lows and injected trillions of dollars into the financial system. They claim this is to stimulate growth, but the truth is they are just trying to prop up an unsustainable economy that is running on debt. Every dollar they print diminishes the value of the dollars already in your wallet. Every government bond they buy is a bet against the stability of the financial system. And in this environment, gold and silver are the only assets that are not directly tied to the solvency of the government or the policies of central banks. People often ask, why should I own gold and silver if I'm not going to use it to buy groceries? That question misses the point entirely. Owning precious metals is not about speculation. It is about insurance. It is about protection against the erosion of wealth. If you hold dollars today, you are losing money even if nothing else happens. Inflation is silently eating away at your savings. The cost of living rises while the number in your bank account stays the same. Gold and silver are immune to this slow theft. They preserve purchasing power in a way that no bank account, bond, or stock can guarantee. Look at history. Every major currency collapse, every financial crisis, every period of hyperinflation has rewarded those who owned real money. People who held gold and silver didn't have to worry about the value of their savings. They could maintain their standard of living even as paper money became worthless. And we are seeing the same forces building today. Governments are spending recklessly, debt is piling up at record levels, and there is no plan in place to stop the money printing. If you wait for the government to fix this, you will be waiting forever. But if you hold gold and silver, you already have the protection you need. And let's talk about silver for a moment. People often underestimate it, but silver is even more volatile and potentially more profitable than gold. It has industrial uses, it is rare, and its supply is limited. When the dollar weakens and inflation rises, silver reacts faster and more dramatically than gold. For anyone looking to protect wealth and even grow it in real terms, silver is an essential part of the portfolio. Owning gold alone is not enough. Silver complements it, offering liquidity, affordability, and leverage against the collapse of paper currencies. You also have to understand the psychology of the market. Right now, the majority of investors are trapped in the belief that the stock market represents real wealth. But stocks are just claims on future profits, and profits are generated by a system that is crumbling under the weight of debt and inflation. When the next crisis hits, when confidence in the system falters, the paper assets will collapse and the value of gold and silver will soar. Those who held metals beforehand will not just survive, they will thrive. Timing is everything. The problem is that most people will only buy gold or silver after the price has already shot up, after everyone else has realized the danger, and after the central banks have triggered the next crisis. By then, it may be too late. The goal is to position yourself before the storm hits, to understand that these metals are not a luxury, not a speculative bet, but a fundamental requirement for anyone serious about preserving wealth. If you already own them, recognize their value, protect them, understand that you are sitting on real money in a world filled with worthless paper promises. Finally, it's not just about wealth, it's about freedom. Gold and silver allow you to maintain control over your financial life. They are outside the reach of governments that can confiscate, devalue, or manipulate your assets. When the system fails, when paper money loses credibility, these metals are the one thing that can't be taken away from you. They are portable, liquid, and universally recognized. Owning gold and silver is owning independence, security, and the peace of mind that comes from knowing your wealth is real. In the end, if you already own gold or silver, don't take it for granted. These are the tools that will preserve your financial life when the rest of the system is collapsing around you. They are not a gamble, they are protection, insurance, and a lifeboat in a sea of financial uncertainty. The question isn't whether the value of these metals will rise, it's when the world will finally recognize what you already know. And if you act wisely today, you won't just survive the coming storm, you'll be standing strong, holding real wealth in your hands while everyone else is scrambling to find security in a system that has failed them. If you think the markets are stable, think again. Right now, what we are seeing is a fragile illusion, a bubble built on debt, cheap money, and the belief that central banks can control everything. The truth is, the system is highly unstable, and anyone who thinks otherwise is living in a fantasy. Investors are being lulled into complacency because stocks are hitting record highs and bonds are yielding almost nothing. But these numbers tell only half the story. Underneath, the foundations are crumbling. The real potential moves in the market over the next months and years will shock those who assume everything is safe. The first thing you have to understand is that the markets are no longer a reflection of real economic value. They are a reflection of liquidity. When central banks flood the system with money, stock prices rise. When interest rates are low, investors are forced into riskier assets just to get a return. This creates an artificial environment where valuations have nothing to do with fundamentals. Companies may not be profitable, debt levels may be unsustainable, yet their stock prices continue to climb simply because money is cheap and abundant. But when the tide turns, when interest rates rise or confidence falters, these same assets will fall dramatically. The potential for correction is enormous, and it is not a question of if, but when. Look at gold and silver as a case in point. Their potential moves are intimately tied to the instability of paper markets. As stock valuations become increasingly disconnected from reality and the dollar continues to weaken, gold and silver are poised to surge. This is not speculation, it is predictable behavior based on historical patterns. Every time the financial system becomes overleveraged, every time the government prints more money to cover deficits, precious metals respond by increasing in value. Gold could easily reach $2,300 an ounce, and silver could see even sharper moves. These metals don't rely on confidence in banks or governments, they rely on reality, on tangible, limited resources, and the market knows it even if the average investor doesn't. Now consider bonds. They are widely seen as safe, but nothing could be further from the truth. With interest rates near zero, even a small uptick can cause bond prices to collapse. Governments have accumulated unprecedented levels of debt, and servicing that debt is becoming more difficult by the day. Investors are ignoring the risk because they believe central banks will continue to intervene. But what happens if inflation accelerates beyond their control? Bonds will plummet, yields will spike, and those holding what they thought was a safe asset will face significant losses. The potential moves in this area are dramatic, and the average person is blind to it. Equities themselves are on borrowed time. Corporate earnings might be strong on paper, but that strength is heavily influenced by cheap borrowing and one-time government support programs. Strip that away, and many companies are far more vulnerable than investors realize. A shift in sentiment, even a minor one, could trigger a rapid sell-off. The potential for sudden, severe corrections is high, and let's not forget global markets are interconnected. A crisis in one region, a policy misstep in another, or even a geopolitical event can cascade across the financial world, amplifying losses in ways that seem unimaginable until they happen. The dollar is another critical factor. For decades, it has been treated as the ultimate safe haven, but its value is eroding every day. The combination of record deficits, massive money printing, and declining global confidence means that the dollar could move sharply downward in value relative to gold, silver, and even other currencies. Investors who remain fully exposed to dollars may be in for a rude awakening. The potential for the dollar to weaken dramatically creates an enormous opportunity for those holding tangible assets, but it also creates significant risk for anyone relying solely on paper money. Timing is everything in these markets. The moves are not going to be gradual. When the system corrects, it will do so violently. We are talking about rapid, large-scale shifts that could wipe out unprepared investors in a matter of weeks. Those who understand the signals, the unsustainable debt levels, the inflationary pressures, the disconnect between valuations and reality, will have a chance to position themselves ahead of the storm. They will move into assets that preserve wealth and offer protection, while others scramble to minimize losses. The potential moves are enormous, and preparation is key. Finally, the psychological component cannot be ignored. Most investors are blind to risk because they have never experienced a real market collapse. They see short-term gains and assume stability. They see central bank intervention and assume control. But history is clear. Markets overreact to instability, and they do so violently. The potential moves will not be linear. They will be sudden, unexpected, and severe. Being on the right side of those moves requires foresight, courage, and an understanding of what drives real value. The lesson is simple. The markets are on a knife's edge. Stocks, bonds, and currencies are all vulnerable. Gold and silver are poised for massive gains. The potential moves are not minor. They are transformational. Anyone who ignores this reality is gambling with their financial future. The time to understand, prepare, and position oneself is now, not after the storm has already hit. Because when the market moves, it won't wait for you. It will move, and only those who have anticipated it will survive and prosper, while the rest are holding assets that no longer hold any real value. The reality is that most people have no idea how dangerous the current monetary environment truly is. The Federal Reserve has convinced the public that it can control inflation, steer the economy, and prevent crises, but the truth is far more sobering. The Fed does not create wealth. It creates illusions of wealth. Every time it prints money, manipulates interest rates, or intervenes in markets, it is only delaying the inevitable and making the eventual adjustment far more painful. Inflation is not some distant threat. It is here. It is accelerating, and it is eroding the value of every dollar in your pocket. People think low interest rates are a gift, but they are really a tax, a hidden tax on savers, retirees, and anyone who depends on fixed income. When the Fed keeps rates near zero, it punishes those who try to save for the future. It rewards borrowing and spending while undermining the ability of ordinary people to preserve their wealth. And while some cheer the rising stock market as proof of success, they fail to realize that these gains are built on borrowed money, on easy credit, and on the artificial support of the central bank. They are not real. They are a mirage. Inflation is the inevitable consequence of all this monetary manipulation. Prices for everyday goods rise and wages struggle to keep up. Your grocery bill, your rent, your utility costs, they all climb while your bank account stays the same. And because the Fed insists on using a flawed measure of inflation, many people don't even realize how much their purchasing power is being eroded. But for those who pay attention, the signs are everywhere. Commodities are rising. Housing prices are climbing, and even the cost of services is skyrocketing. This is not a temporary phenomenon. It is the predictable outcome of years of reckless fiscal and monetary policy. The Fed claims it can taper or adjust policy at the right time, but timing is not their strength. By the time the public notices a problem, the system will already be destabilized. Inflation tends to build slowly, quietly, and then suddenly accelerate in ways that are almost impossible to stop. When confidence in the dollar begins to waver, when people realize that their savings are shrinking in real terms, there will be a rush to tangible assets like gold, silver, and other stores of value. That rush will be swift, and it will send prices soaring. The Fed can print money, but it cannot print confidence, and it cannot make up for decades of overspending and mismanagement. Debt is the other part of this dangerous equation. The United States, like much of the world, is drowning in debt. Every year, deficits grow, and the Fed must find ways to absorb or mask the consequences. It does this by buying government bonds, injecting liquidity into the financial system, and keeping interest rates artificially low. On the surface, it seems as though the system is stable, but the reality is that it is brittle, and the next shock, whether it comes from a geopolitical event, a financial crisis, or just the natural consequences of debt accumulation, could trigger a chain reaction that the Fed will not be able to control. Inflation will spike, interest rates will rise, and those holding paper assets will feel the pain immediately. Consider this. The Fed can manipulate interest rates, but it cannot force businesses and consumers to act in ways that are sustainable. It cannot make people spend wisely, save responsibly, or plan for the long term. When inflation accelerates, the value of debt changes dramatically. Fixed income investments lose real value, and the cost of borrowing climbs for businesses and individuals alike. Those who are over-leveraged, those who relied on the illusion of cheap credit, will suffer the most. And while the Fed can attempt to intervene, history shows that central banks are almost always too late. Their actions lag reality, and their interventions often amplify the problems rather than solve them. Gold and silver are the natural consequence of this mismanagement. When fiat currency loses credibility, people turn to assets that have intrinsic value. The demand for real money increases, and with it, the price. The Fed can't stop this. It can't prevent the public from seeking protection. And those who fail to see the risk of inflation are the ones who will ultimately lose. You cannot print wealth, and you cannot print purchasing power. That is why tangible assets like gold and silver are not speculative. They are essential. They are the only way to preserve value in a world where money itself is being devalued. The psychological impact cannot be underestimated either. People are comfortable because they trust the Fed and the dollar. They believe the system will always work, is controllable, and that crisis can be avoided. But that comfort is an illusion. The longer the Fed tries to suppress inflation artificially, the greater the eventual adjustment will be. And when it comes, it will come fast, striking hard, and catching the unprepared off guard. Those who have positioned themselves wisely with tangible assets, those who understand the underlying forces at work, will have security. Those who rely on paper money alone will have very little. Ultimately, The story is simple. The Fed has created a fragile financial system that is dependent on confidence, debt, and continual intervention. Inflation is no longer a distant possibility. It is a present reality that is accelerating. The potential damage is enormous, and the sooner individuals recognize it, the sooner they can protect themselves. Ignoring this risk is a choice, one that could lead to devastating losses. Understanding it, preparing for it, and taking action now is the difference between surviving the coming storm and being swept away by it. Every dollar printed, every interest rate manipulated, every government bond purchased is a step toward the next crisis. And when that crisis comes, those who understand the risk will already be on the right side of the trade, while the rest will scramble to salvage what remains of their wealth. At this point, the question isn't whether the economy is vulnerable or whether inflation is eroding your wealth. It's whether you are prepared, because preparation is everything. The truth is, most people think that sitting in a bank account, holding bonds, or relying on a 401 is enough. They assume that the system will protect them, that central banks will always intervene, and that their paper assets are safe. But the reality is starkly different. The financial system is a house of cards built on debt, leverage, and faith in a currency that is losing value by the day. And when that house of cards collapses, only those who have positioned themselves correctly will survive and even thrive. Preserving wealth is not about chasing the latest hot stock or hoping for a market rebound. It's about understanding what money really is and where real value lies. Physical assets, tangible assets, gold and silver are the cornerstone of true wealth preservation. They are not dependent on government promises, not influenced by central bank policy, and not subject to the whims of stock market sentiment. These metals have withstood the test of time. When paper money fails, when the dollar weakens, when inflation accelerates, these assets hold their value. They are insurance against a financial system that is inherently fragile. You need to take a hard look at your portfolio and ask yourself, if the system were to falter tomorrow, would my wealth survive? Would my purchasing power be protected? Would I be able to maintain my standard of living, or would I be at the mercy of an economy spiraling out of control? Most people never ask these questions until it's too late. They are lulled into a false sense of security by short-term gains, by rising markets, by the illusion that central banks can fix everything. But history tells a different story. When confidence collapses, when inflation spikes, the losses can be swift and severe. The time to act is now, before the storm hits. Diversification is critical, but not in the way most people think. Diversifying across stocks, bonds, and mutual funds does not protect you if the entire financial system is at risk. True diversification means holding assets that are outside the reach of government manipulation and monetary policy. Gold and silver are the ultimate diversification. They provide protection, liquidity, and stability in a world that offers neither. And they offer an opportunity not just to preserve wealth, but to grow it in real terms as the value of paper money continues to decline. Timing and action matter more than anything else. You cannot wait for the right moment, because by the time the market signals become obvious, much of the opportunity will be gone. Those who act early, those who recognize the signals, understand the risks, and position themselves accordingly will be the ones who benefit the most. Waiting for confirmation is a luxury that could cost you everything. Wealth preservation is not passive. It is proactive. It requires education, awareness, and the courage to move against the conventional wisdom that has failed so many investors in the past. Consider also the psychological advantage of owning real assets. When paper money is devalued, when stock markets crash, when bond yields are meaningless, people panic. Those who rely solely on the system are forced into reactive decisions, selling at the worst possible moment. But those who have prepared, who hold tangible wealth in gold, silver, or other real assets, have confidence. They have freedom. They can make decisions calmly, knowing that their wealth is protected. This is not hypothetical. It is the difference between surviving a financial crisis and being crushed by it. It is also important to understand that this is not about greed. It is about preservation and prudence. We live in a world where reckless spending, excessive debt, and irresponsible monetary policy are the norms. Expecting that your paper wealth will remain safe in this environment is naive. Protecting your assets is a rational, necessary response to an economic reality that most choose to ignore. Every dollar you allocate to tangible wealth is a dollar shielded from the erosion of inflation and the mismanagement of central banks. The window of opportunity is limited. Governments cannot print their way to stability forever, and markets cannot stay detached from reality indefinitely. The longer you wait, the more expensive it becomes to protect yourself. The longer you delay, the greater the losses when the inevitable adjustment occurs. Gold and silver are not speculative. They are essential. They are the only form of wealth that stands independent of government policy, fiat currency, or market sentiment. For anyone serious about preserving wealth, ignoring this fact is no longer an option. Finally, the call to action is simple but urgent. Educate yourself, understand the risk, and act decisively. Don't wait for confirmation from the mainstream media or for the next market crash to realize the truth. Position yourself now in assets that have intrinsic value, assets that cannot be devalued and assets that will protect your purchasing power. Wealth preservation is not about timing the market perfectly. It is about understanding the system, recognizing its vulnerabilities, and preparing for the inevitable. Those who do will survive and potentially thrive in the face of what is coming. Those who ignore the warning signs will face the consequences. The decision is yours and time is running out. Every day that passes without action is another day your wealth is exposed to risk. Protect your future, protect your family, and take control of your financial destiny. Wealth preservation is no longer an option. It is a necessity, and the sooner you act, the stronger and safer your financial position will be when the system finally corrects itself. Act now because the world will not wait for you. Remember this, wealth is not measured in dollars. It's measured in real tangible assets that withstand the test of time. Gold and silver have done this for thousands of years, and if you pay attention now, you could be the one standing strong when everyone else is scrambling. Don't wait. Don't hesitate. The clock is ticking.